Hello and welcome everyone to the week ahead commodity report for the 22nd to the 26th of October 2018, presented by myself, Phil Carr, at the Gold and Silver Club. So this week, of course, we'll be having a look at gold and oil as we go into a fresh week. At the end of last week, we have seen some support here into the close for crude oil prices on Friday, rising 1% on signs of surging demand in China. However, over last week, crude oil prices did pull back 4%, and hedge funds and money managers have continued to cut their net long positions to the lowest level in over a year after we saw an increase again in oil inventories, with US crude stockpiles last week rising by 6.5 million barrels, almost triple what was forecast, and that has been the fourth consecutive week that we have seen US crude oil stockpiles rise, which has certainly put some pressure on oil. But going into next week, we are at quite a critical level for crude oil, and we'll have a look at that very shortly on the chart. Also, into the close on Friday, the US dollar did weaken, and that's also helped to lift gold prices. Gold so far over the month of October is up over 3%, and we've got technical momentum. Gold this week has been trading at 2-month highs. So with that, we'll move over to the charts and we'll talk you through the key levels that we're looking at next. First of all, if we move over to US crude oil into the close on Friday, crude oil has closed up 1% on the day, and you can see here when we're getting some support at quite a key level here. US oil is getting supported at the monthly pivot and also the 61.8 Fibonacci retracement level, which can of course be an important reversal point within an overall upward trend. So of course, if you zoom out on the chart here and have a look at this with US oil, we do still maintain that overall upward trend on this market. And I would be looking to see next week whether we will get support at this zone. This is quite a key level for oil to potentially rebound from as we go into next week. You want to continue to trade the range here on oil. So we're still looking week to week at approximately a $3 to $4 range. Certainly last week we did see that again. So we saw oil break down approximately 350 points from the low to the high. So it's about a $3.50 range for oil last week. As we go into next week, we'll look to take advantage again of the range here, and I would look out for the potential for oil to bounce from this zone. Certainly if we break back above Thursday and Friday's highs, we could potentially build up some momentum here to the upside. You've also got the potential for a bull flag formation if we were to be able to break out of the recent downward trend. It's got a bit more work to do there, but if we were to see oil start to build up some momentum, bounce off the monthly pivot, 61.8 Fibonacci level, and start to build up momentum going into next week, it could be a reasonable bounce here, taking the price back towards a previous monthly pivot here as well. So I would definitely have US oil here on the radar going into next week. On the flip side of that, of course, if we were to roll over for oil, I would see potentially the price back towards a 67 US dollar level. That's only if we were to break support here and if we were to roll over going into next week. Now, moving over to gold, as we discussed on the midweek report as well, we've been expecting a tight range on gold this week, and that is exactly what we have seen. We've capitalized on the range here. In fact, we banked profits on Friday, and we'll look to re-enter into a trade here on gold going into next week. We are consolidating at the 2-month highs at the moment. Very tight range at the moment on gold. So we're essentially trading last week between $1,233 US dollars, and we traded down to approximately $1,217. So we're just above about 150 point range here over the last week for gold, and that's one of the tightest ranges that we've seen on gold in approximately about 2 months here. So the movement that we've seen on gold this week, it still continues to consolidate at the upper end of the range. We have still held on to a lot of gains from the previous breakout. So going back to the previous week, this is where we saw the breakout on gold, which took the price back up to 1,226 US dollars per ounce. That was the biggest move for gold, one-day move in over 2 years. That was a very significant breakout, and we haven't really seen much of a retracement here either. So we've continued to consolidate on higher time frames. We could see the potential for gold to still climb higher up to $1,240, but it does need to just break above the weekly highs here. Otherwise, if it continues to consolidate like this, it is vulnerable that if we do start to run out of momentum to the upside here, we could see some profit taking going into next week. I do note got European Central Bank announcement. I would look out for that, because on Thursday through to Friday, I would definitely expect some big volatility here for gold, and I would keep a lookout for that towards the end of next week. But of course, we'll be executing new trades on gold and oil as we go into next week. If you'd like to find out more about the exact trades that we'll be taking at the Gold and Silver Club, and you'd like to join a community of successful traders, there is an opportunity for you to do so. If you would like to get access to the private members live trading room service, you get access to the following: live trade alerts. These are delivered via WhatsApp, email, and SMS. You also have access to mentorship, expert advice, in-depth market analysis, and trusted insights alerts so you can know earlier how to act quicker and maximize your return on every trade opportunity. For more information, please go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And also make sure you subscribe to our YouTube channel. That way you will be kept updated with the latest commodity reports.